Hello, how's it going? I hope that you're doing well. In this video, I'm going to be going over this particular trade in the dollar index. So this is going to be about the dollar index and the two trades that are coming up, and I'm just going to call these like the Hitman trades because there are these levels that have to be hit. And right here, what we're looking at is a daily US dollar chart, and the yellow line is showing our 100 level, which is basically the halfway, the mean, the golden mean in this case, because it's not really half of this movement, but 100 is at the golden ratio, around about the golden ratio of this entire price movement. So what I'm looking for are movements to these areas that are put in the golden rectangles here, or just these levels here, because what I can see are gaps in the market. All right, so there's a gap here, and when we move back in time, we see that at the bottom of this market here, the bottom of this market, we have a gap there as well. So there's a gap here and there's a gap there. So these levels have to be affected by the price at one time or another. So the premise of the Hitman trades is that they have to hit these levels, which is going to be awkward because they have to go all the way up and all the way down. So far the price is moving sideways, and it's going to continue moving sideways, but only that it'll be trending when it does that. But after that, then the prices will pick a true direction. So there's so much turbulence in the market, and we're going to see some more turbulence in the market as time goes on. So as you can see, there's this pennant pattern that is forming, and within the pennant pattern we have the index coming to or being above or below 100, and this is where price has been ranging and consolidating for quite the longest time. So what happens in a time like this is that a lot of traders still need to feed their children, make money, pay bills, keep the lights on, drink water, get new clothes, and whatever. So when the market is not trending like this, some traders are getting into these market micro trends and waiting for a bigger trend. And while this is happening, they're not able to capture the value in the micro trends. So when you're able to trade the easy parabolic trends, I don't know if they're actually easy because when they move like this, people don't see it happen. But when you're able to trade in a smoother market, I would say, like a market like this, where price is not making crazy moves, but it's within the range, within the bounds of normality, right? When market is moving like this, it's very different from when it moves parabolically like that and when it moves in a range like this. So you'll be looking at both of those aspects and finding value in all different market conditions, and this is the main point. Like a move like this, rather smooth, but it's coming from this contraction. So we're seeing a contraction right now, but very soon we're going to be seeing a very deliberate move in a single direction for a prolonged period of time, which is called a trend. And within the trend, it has some retracements and whatnot. But as far as I can tell, as far as I can see, the trend has not yet unveiled itself as to which direction it's going to be going. But as for now, the Hitman trades are what's right there in my face. So this is what I can see, and in these market conditions, I'm seeing that this pattern is almost complete. And as soon as this pattern is complete, the price has to move very quickly to this level and also move to this level. So whether or not the pattern breaks up or down, we're gonna have to see these hits made. And when we look on our 4-hour chart, what we're going to discover is that there was already a hit at this level that was made, and this is in my previous videos where I'm speaking about trading or playing the gap. So this is when you're waiting for this gap to fill, and this is exactly where the market came, and this is where it's bouncing right now. But what's happening is that it's within a pennant formation, forming this triangle, but at the same time it's forming a double bottom base. So this could be an up move on a smaller time frame, because we have a bottom here and a bottom there, so a double bottom. And it looks much clearer when we use this to an extent. But this was also another double bottom within it, and this one also has another double bottom within it. So it's a double bottom of a double bottom and a double bottom. So let's take another look. So now when I go to the hourly chart, this is what I can see. So this is the other bottom, this is the gap, and this is the other bottom. So when we zoom into that area of where we are today, we see that we just had a double bottom. So on a 15-minute time frame, this is more apparent that from yesterday's trading there was a bottom, and from today's trade the day before's trading there was a bottom, and from yesterday's trading there's a bottom, and price is currently here, and it is currently making what seem to be higher highs, but we're always on alert for a trend change because it's still sub 100. So it's not yet confirming a long, but it's showing signs of a long. So anything above 100, you know, we just shoot for that hit to be made in the heights of 103, 104, maybe even 105, you know, and the lows of 94 thereabout. So it could get as low as it will get as low as 94. The only thing is being able to ride the bull, like it's like bull riding. I saw this video of a person bull riding, like, yeah, it's like riding a bull. And once you're doing that, you're doing something that's not easy. But once you're doing it and actually riding a bull, what you're doing is going it, like you're doing something that has a lot of risk, but you're doing it with a professional attitude. This is not a gamble. So when you're able to do that successfully and consistently, then you're able to consistently dictate how much you want to make, how much you wanna take to make that, and you're also able to reevaluate your time and your resources, because knowing that this level will be hit, right, it gives you the understanding that there's going to be a lot of movement that is happening and forecast in the future. So in a time where the market is contracting like this, you're able to either be trending in the micro trends, if you're able to detect that as quickly as possible, which in most cases people see things after the fact. So if you're able to trade the micro trends, you're already a person who's determining and telling the market already, like, all right, in the market I am going to trade and I am going to make this amount in this type of movement, and this is already predetermined. This is the only type of person who can actually benefit in a market that is contracting like this. But the vast majority of people, and the easiest way to make money, which makes you more money, is to go with the flow, to follow the trend, to actually follow the money. So when you follow the money, you make more money because you're where the money is. So it's like you don't have to make money, you are money, you're within money. So when you follow the trend, this is when you make more money for a longer time, because the same methods you use in a micro trend are used in a macro trend. So if you're able to make 10,000 from a move that's this small, then if you double that, then you're able to make maybe quadruple that, if you get the mathematics, because here we're using ratios in our rationing. So the rational understanding is to have the patience to wait for this to happen. All right, because most of the money in the markets is made when people are sitting on their ass, and see if this down move is really going to continue, this down move. But from what I can tell, the price has to come here at one point or another. But will it go down or up first? That's the question. But it's going to have a very clear indication before it does. But as for now, we don't have a clear enough indication. What we have is this double bottom, and this is the strongest evidence that we have for now. But until more evidence gets itself uncovered in the process, we're going to be cautiously accumulating positions in this area, so that by the time it starts moving, we're already on the train. This is the whole trick, that we don't want to. I don't like entering trades like if this is gonna break out in this direction. For example, if this is gonna happen, right? For example, the price will just break down. I don't enjoy taking so many trades like somewhere here, like to enter my position here. I don't enjoy that. But what I do like, and what I love to do is, if the price is gonna break down, there's gonna be a position that is flagged here with this high. This is my pivot, which will show me that price is actually gonna break down. But as far as I can see right now, it seems like this is a sign after 1, 2, 3, 4, 5 quintessential touches on this triangle. We could argue this is a 6th touch, but then you can see that the whole pattern of it is awkward. Even the hits are awkward. Everything about it is so awkward about this trading range. It is not so clear cut like this area. This area is ranging a little bit, but it's definitely coming from somewhere. There wasn't crazy mad volatility recently, and obviously there weren't all of the economic problems we are now having. In fact, when we go to the 2008 levels, we'll see that there was also some awkward price action. So when we go to 2008, we see that, like, if you were trading, I think this might have been an easier market actually, because you have a base here, right, in 2008. So this is February 2008, and then what I have here is that you have this base here, right, and then you have a resistance, and you have another pivot here, which is your you have a support that was broken. All right, so at one point it has to be a resistance, and it came so low, like the resistance came here, right at the wick, not at the body, right? And then this is when the resistance was formed, and then price just pivoted and blew out of that and just went straight. It did come back down, and this caused a lot of calamity and took a lot of people's money away before it went back up, but it came back down, right, before it picked another position and went back down. So it had a lot of zigzagging. So it was an awkward market as well. But this one was much easier in my eyes right now, because I'm looking at this in retrospect. But when it's happening in the moment, it's not as easy. All right, so this is the same conundrum that we find ourselves in right now, that we are having a lot of zigzags. So we might see a lot of these movements. So some profits have to be taken quickly, but some of the profits are going to be for the trend that will ensue later. So for now, what really makes sense for me is these Hitman trades, that if we can extract value from these Hitman points, I think we would have a good footing in future investments. So again, this is based on the whole idea of the gap theory, which is in a video on just trading gaps. So this is one of the most the reason why it's so important, right? It's so special, and it's so special because no one looks for this very easy method, right? Because when I made the video, there were like no views. So this is a great thing, because it means that a lot of people don't exploit this. Even if they did, the gap will still fill. So even if people knew, it will happen because people know that the gap has to be filled. But in any case, it gives me more assurance that no one knows exactly how this gap theory is working. That's why no one is really trying to look for that information. In other words, it's not like in anyone's mindset. Everyone knows about support and resistance. but support and resistance works when you're already in a trend. Everyone knows about moving averages, but moving averages are not the key to trading. Everyone knows about trend lines, but no one tells you how unreliable trend lines are, right? So no one is talking about gaps. That's why I'm talking about it, and really encouraging anyone who is watching and understanding what I'm saying to watch the videos on the gaps. Then you know this very easy and simple way to extract money from the market very easily. So yeah, this is why I'm making this, so that you can watch that, so that you can know this and know that. And if you're interested in more information, get into more of my information. I have some programs and some products out that are paid if you want to know more. But in any case, I do think my own endeavor is just to give you enough value so that if you have to invest further on into buying anything that I produce, it is risk-free, because you've already extracted value from these videos. So this is why I'm like really explaining everything the way that I see it for whom it may concern, so that, you know, no one can say I didn't try to tell anybody, because my SEO game is on point. I make sure that if you're really searching for this, you're gonna really find this. And I'm just trying my best to get in these algorithms, you know, trying to finesse a computer, romancing a stone, but it doesn't really work that way. So this is why I also encourage you to also share and spread these videos, to like them and stuff like that. This really helps to finesse these computers. But in any case, you found me so they can find me. So if you're reading, if you're hearing this, right, if you're hearing this, then check out that video and trade these gaps. So this is the Hitman trade strategy. So this is only gonna last for now, and it's free, but from what I can see, this is what's up. So I'm really gonna be updating this so that we have more conviction, especially when this pattern breaks. But just lay low, right? Kick it on a higher time frame. At the base level, this is our pivot, and this is also our pivot. So in the case that the price reverses from here, this is probably going down for a while, unless if it's a false break, because in these types of patterns, the first break is usually a false break, because there's always a retest. So that's going to be a possibility. But as far as I can tell from everything that I can see right here and right now, this is looking bullish at the moment for the past couple of days, and it has to still confirm this bullish behavior. But still, this is a risk-taking business, so you have to have your risk adjustments in order in any event, and be patient enough to wait for this blow up, and we'll see how far we can actually ride this trend and invest in this. So yeah, so thanks a lot, and I'll see you in the next video very soon.